YouTube. This is Ray, or TerrenceRe, that is the whole name. Taking you into the close of the market on Friday. We're gonna go ahead and get right to it. I got the S&P 500 futures up 35 handles on the day. We got the Nasdaq is up 170. We got the Dow futures up 195, and the Russell is up 4. And for the most part, gold is about flat. Yeah, gold up about 3 handles. Oil is down, maybe 1%. And pretty much, you could call it an up day, a slight up day. So the market, for the most part, is just getting back what it's given up for the week. Let's take a look at the SPX, which is the option market for the S&P 500. And you can see we got a little, a nice size green candle after being down for the majority of the week. And what I call this is just a little retracement. Is it going to go up and continue, to march back up next week and take out highs? Generally, what I end up seeing over the weekend is, they end up coming out with some news later on this evening, and that's what generally takes the market down over the weekend, where you have no opportunity to make any changes. So what I like to do is look at the SPX and come to the trade tab, and then we're gonna look at the expected move for next week, and we can look at that by looking at the option market. I had a short call spread. If you looked at my video from yesterday, I think that hit yesterday on its own. I had to take profit set, closed it out, took profit on that. I had a GTC, so good to cancel. I had already set it for a certain percentage of profit, and then that hit yesterday. So we got basically 61 points plus or minus. So next week, basically, what I'll do is, to make it easy, I'm gonna make this, take everything off. Then we're gonna come up here and click on this, and it's gonna show the expected move. And this is next week. So from where we are right here, the market will approximately go up about 61, about 61 points from here. So if you look here to here, this is what the expected move, and they use the implied volatility of the options market to give you your expected move. And so we can kind of look this week. It was about the same if you're looking at it, and we kind of stayed. If you look at it from here, it went down here. You can see it touched it right around that area, the expected move, and kind of retraced a little bit. And then next week, so you can kind of look and gauge how large, like how much vol or how much volatility, how much movement is being priced in the options market in the S&P 500. And then you can kind of look and, kind of expect. That doesn't mean that you'll know exactly what's going to happen, but that's one way of looking at it. And the VIX, of course, is down on the day. Facebook ripped today. Let me take this indicator off. Facebook ripped. Facebook is up about 3.7%, almost 4%. It's up $12 on the day. I actually looked at it this morning when the market opened, and I was contemplating getting long, buying like a call option or something just for the day, scalping it. I should have. That's one of the things with trading. You got to be decisive. Go ahead and decide to make your move. I didn't see the market having a big green day in Facebook or Meta. As it's going to take some, getting used to calling it that. And by the way, on December 1st, they will change out this ticker symbol. So it'll no longer be FB. I want to say it's MVRS is what they're going to change it to. So you got that big move on Facebook. It's up it crossed back over the RSI 50. And a lot of times when I get a move like that, I like to think that next week it'll keep going. Don't know that for sure, but I would like to think that, we're going to keep getting that up move on Facebook. So maybe next week you could either, if you're not already long, you can get long Facebook, do a little scalping, maybe buy some options or something like that. Just be able to, don't risk more than you can handle. Um, also want to take a look at Johnson and Johnson. Now, if you didn't hear, Johnson and Johnson is going to be splitting up the company. Let's see. Johnson and Johnson is becoming two companies. So they're gonna split. My guess is, I don't know for sure. So I'm gonna bring up the company profile here on Thinkorswim. And if you're looking at this, I don't know if it's showing on. It's not gonna show on the screen. Let's see if I'm gonna be able to switch it, because I want you guys to be able to see what I'm looking at, and I don't think I'm gonna be able to switch it out. But basically, the company profile is showing that Johnson and Johnson has a Trefis estimate of $200. So basically, they have a target on here of $200. So it's currently at 164. That's another 35 bucks or so, right? And as far as looking at the blocks or divisions of the company, let me see if I can pull this up, because I want you guys to be able to see it. Let me see if I can stop the share, and let's share another screen. Where you at? You got to be up there somewhere. Let's go to window. Let's see. Share. Is it sharing? I should have already had this ready. Here we go. You guys see that? You can see that right over here where my cursor is, 69% of Johnson & Johnson's profits is pharmaceuticals. So my guessing is, and you got to factor in with the coronavirus and COVID-19. So they're one of the companies that has the the jab for that. So I'm guessing that they want to separate that. They want to separate the pharmaceutical division from the device division, and then have them tracked separately. So I guess from a business standpoint, that might be pretty smart. But if you look at the let me see if I could take this down, and then bring back up the chart where you guys can see that. Boom. Now look at if you look over here, you can see it actually gapped up, and it earlier this morning it was up around $1.60, call it $1.67, and then it kind of retraced a little bit. It's back down to 165. It's still up about $2 on the day, but you can see it broke out of this little range right here that it had been in for like the past month and gapped up. So we'll see next week if Johnson & Johnson will continue on that up move. Remember, they have an estimate of it, a target of $200. So this may not be a bad long. You look now here at the RSI, crossed over, broke out of this range, and it could continue to go to the upside. So it may not be a bad play, buy some shares and hold, in Johnson & Johnson. Let's take a look at the bonds, which the ETF TLT. I actually placed an iron condor in TLT today because the market, I really didn't have a bead on a particular stock or anything that I want to, I have in this particular trade. I just pretty much just do all of my trades are either 1 day to maybe 90 days, nothing more than that. I don't really buy and hold in this particular account. So I didn't see anything that I wanted to, get in quickly and get out of. So basically, TLT has an IV rank of 50. And with an IV rank that high, I just figured I'd do an iron condor since I don't know exactly where the market is going to go, or I'm not sure where bonds are going to go. I said I'll do an iron condor, which is pretty much it's a neutral strategy. I don't care. I just want the market to stay within a range. And so if we come down here and we look at it, you can see over here on the put side, I sold the 29 delta or the 143 strike, bought the 138 strike, which would be the 13 delta. Came over here, sold the 22 delta and bought the 10 delta. And I made a $5 wide strike. I took in $1.34. So if we go to the analyze tab, and I'm gonna go ahead and analyze this, and I set the slices to break even. So basically this particular trade has about a 54% probability of profit that I need. I just want to see the stock bounce back and forth and stay in between this range right here where these dotted lines are. And I got a better than 50% chance of doing that. And that percentage will be a little higher because I'll manage this. I won't try to hold this until expiration. I will manage this within probably 2 weeks and take profit out of it if possible, So you don't always have to know which way the market is going. The market doesn't always, you don't have to be directional. You can trade neutral strategies like selling premium. When you have high implied volatility in a particular underlying, you can sell what they call sell premium, basically sell options around it. Come around here, sell something here, and you just want the market to bounce back and forth in there while the IV comes down or time passes, either or. So you're basically becoming what you would call the insurance seller instead of being the buyer. When you buy something, you generally need it to go up, unless you're buying iron condors or something like that, or maybe you're buying a straddle or something like that. But for the most part, when you're selling these things, you want the market to stay away from the strikes where you sold, and you're looking for decay. You're looking for time decay or either vol decay. And as time goes by, the options become less and less valuable, and then you buy them back for less than what you sold them for, thereby having a profit. And so that's just a quick rundown on an iron condor. I plan on doing a video maybe later where I'll go in depth, talking about it. But this is what it looks like. And so this line right here is like your T0 line. So this is where this is the price. This is action like as of today. And as time goes by, you'll see the curve on this line begin to sharpen until at expiration, it'll look something like this, right? It's going to look something like this. But right now, that curve is like this. But as you get, the curve will steepen and get more sharper as you get closer to expiration. And so that's what an iron condor will look like on the analyze tab. And you can come on here. This is, a high probability trade. So for the most part, when you do high probability trades, you're going to win. You should win more than you lose. Now, the money is being made on the management of those trades, because obviously, yeah, you may win, but on the times when you lose, you would lose more money, right? Because I collected $1.34 on a $5 wide, that's going to leave me with $366 risk. So I'm almost, for the most part, risking somewhere around 2 to make 1 or 2.5 to make 1, something like that. So that just that ratio of risk lets you know that you're in a high probability trade, right? The odds are stacked in your favor. So with that, I hope you guys, hit the like button, hit the subscribe button, share the video, and feel free to copy that trade if you want. at your own risk. You can trading options is risky, and you can lose a lot of money doing it. So just want to put that disclaimer out there, but feel free to copy it if you like, and then we'll I'll go, I'll pull up sometime next week, and we'll look at the management of it, because this is a slow moving trade. So it's not like Monday I'll wake up and I'll have to do something to it. It's possible if we get a big move either way. The TLT really doesn't move like that. So and I wanted to take advantage of that. It doesn't, for the most part, have very large moves directionally. And I do want to, let's take a look at Facebook. Jumped up. It basically had a 4% move today. Went all, it's up $13. So I would be I want to see what it does on Monday, to see if I'll be watching this Monday morning to see if it opens with a gap up. You see right here, I have my Fibonacci extension on, and my target on the Fibonacci extension is still 350. So I was in it like right here, and I've already pulled off and took profit on the trade, but I was looking for a place to get back in. So but with that, hope you guys enjoyed the video. Hit the like button, subscribe, share the video, comment in the comment section. Also in my comment section, you'll see I got a link to a particular company called Manset. And they sell men's underwear. I really like the underwear. I wouldn't put it down there and advertise it if I didn't like it. I had like this thing where I'm just searching for the perfect underwear, somewhere you got some room or whatnot. But click on the site. I think you guys will like them. I like the boxer briefs, the ones that come down a little further on your legs. The trunks are cool, but I like the longer ones that come down on the legs a little bit more, give you a little bit more breathing room. But with that, man, I'm out. Peace.